All right, so number 5 for the 5 reasons why I love buying rental real estate is the other tax advantages that you have. So here's where you got to get kind of creative and you got to think down the road. But number 1, so let's say you had all that cash flow from step number 1, and at the end of the year, your property's made a bunch of money and you have to report that income on your taxes. Well, if you are a high W-2 earner, let's just say you're an engineer, a doctor, a lawyer, you're making a lot of money as a W-2 earner. Well, the money you make as passive income versus the active income from your job is taxed at a much lower rate than what your active income is taxed. So every dollar that you make as a passive investor is taxed less for every dollar that you make as a employee or a W-2 earner. So that's one of the tax advantages. We talked about depreciation in step number 4, which is one of the other tax advantages, but then you can also do things like you can roll properties to other properties or larger properties in the form of what's called a 1031 exchange. So when you sell a property, say 10 years after you buy it, and you made hopefully $1 million off of it, instead of just selling that property, taking the cash, and then having to pay a long-term capital gains tax, you can actually roll that money into another property. Maybe you take one property and roll it into 10 or to an apartment or something to that effect, and you're essentially kicking the tax can down the road. Now, if you ever sell the property and you keep all the cash, then more than likely you're going to have to pay tax at that point. Most of these are deferral strategies, but in theory, you can defer them forever until the day you die. So that is number 5.